Hello again, everybody. It's Harry Boxer, the technical trader at thetechtrader.com. It's Saturday, September the 7th. This is the weekend webinar. Well, definitely an eventful week as the markets came off their highs, unable to break through the July highs. We've got major double top type action. And then the hard rollover. And only 4 sessions. That's all we had last week. We went from a close the prior week of 56.48 to a close on Friday at 54.08. That's 240 points. About 5% drop in 4 days. Pretty nasty. And look where it closed, right on support. That's across here. So for me, at this point, downside follow through objective would be around 5,300. If we crush or crack, I should say, the rising channel, intermediate channel, there's maybe a possibility we can come down to that 51, 30, 60 zone down there. But for now, I would look for a bounce short term. If we can't get back to 55.10, 20 zone, then the rollover could take you down there or worse. Something under 5,000 would not surprise me, but that would be a massive break of a major rising channel of the last year. So we'll have to see. Nasdaq's even worse, and I'll tell you why. The S&P at least got up to the prior highs. NVDA failed to do so, and here's you can see it by quite a bit. The high in July and the all-time high, 20,672. The recent high was only 19,938, 700 points short of the confirmation. That's a very big negative divergence. And that's what occurred, a massive negative divergence. Now, the intermediate chart going back, well, it's more of an intermediate because it's a 2-year rising channel was broken. Slightly on the close on Friday, but more importantly, the loss for the week from 19,435 to 18,400 points on the Nasdaq 100, taking out support. Now there's a secondary support level here that I expect will be tested early Monday in that zone, but the way this looks at this point, and I'll show you some of the Nasdaq 100 generals, you'll see that this is likely to see something down there. Even it's possible down here in the next 48 hours starting Monday. It's a hard call. If you do the measured move, yeah, we're headed down there. If it holds support at the lateral price support in that zone, and this is all conjecture, we don't know where the market's going to go, but what I'm going to be looking for is intensity, meaning a big negative tick, a steep McClellan oscillator oversold, and a spike up in the VIX into fear territory. That is the kind of setup that we'll be looking for. That's the Nasdaq 100, and it doesn't look good. The IWM, which my buddy Abi's been following closely because he thinks that's the lead, which was doing great for about 3 weeks, suddenly rolled over hard, and I'm talking about real hard. Look at the close on Friday. The IWM will go from 220 to 207, 13 points, about 6.5%, something like that. No, I'm sorry, that's 3.5%, 4%. So in any case, the bottom line is we broke support. Moving averages broke. Price support broke down to secondary support, near trendline support. I'm going to re-examine this pattern to look like this now. Or should I say reevaluate it? There is a double bottom area here that I think is critical. If we break that, we plunge. That's 197 and change, 196.70. So somewhere around 197, it would be the key for me. But that's 9 points down, and if it holds somewhere between 197 and 201 is this initial support zone. I suspect if we plunge there, we bounce. If we fail or form some sort of bear wedge or flag, we could then roll over some forward. So this is problematic right now. Transportation index, ugly too. A rising channel was broken. Moving averages were cracked. Lateral price support cracked. At this point, looking back at the overall channel, and this is going back to 2 years. The 2-year channel bottom comes in, but that's down here at about 15,000 or 15,427. That does mean there's a possibility of an additional 400 plus points on the downside. Don't know if that's going to occur. We did 2 things I want to point out. There is a low here, a gap fill there, and we close right there. Monday's going to be interesting. Either the market gaps from the get-go or rolls over and spikes down hard. I favor the latter right now. We'll see. But it may only be for a few hours or less. So that's a look at the indices. The underlying technicals show that the oscillator is starting to get oversold, but not extreme. Hold on a sec. The McClellan oscillator, as you can see, has plunged from just the close on Friday of last week when it was 65.70 range. Got down to minus 121. The low minus 130. That's a reading we haven't seen in 5 or 6 weeks, and a zone of which we've had important rallies off of. Now, going back further, you'll see that in the last year and a half or so, we've reached minus 250 to 220 to 250, kind of which, if we're already minus 121, it's to me likely we get an extension to the downside on this. If the oscillator, the tick, and the VIX all reach levels of which I think the market is extreme, then we should be seeing these down here as well, a reading down at that 1 and the 220, 250 range, at which point I'd be much more intrigued by a possibility of a sharp rebound. Percentage of stocks above their 40 is dropped back to 37%. So only 3 out of 8 stocks at this point. 3 out of 8. You see the pullback. Are above their 40-day moving averages. So more stocks below their averages now than above. And now, in terms of extremes, we've seen this all the way down to 12, 15%. Back in April, it reached about 20 and bounced. So something in the 20, 28 range, right about there, would be a logical place for this thing to plunge into, if we do get a plunge in the market, which I think we might. Okay. And what about the VIX? The volatility index VIX, which went bonkers one day, beginning of August, actually for 3 days, and then pulled way back. Right now, it seems to be broke out, it's bouncing. And I suspect that on Monday morning when we come in, we're going to see this above 25, and we may see it closer to 30, 29, 30. But it may very well gap and run. It could get up to mid-30s or even 40. Everything depends on the intensity of the market on the downside, and we're going to have to play it by ear at that point. Trade what you see, not what you think, folks. Okay, so those are the underlying indicators. Let's take a look at the big components. Apple, these are really not looking good, folks, so I want you to pay attention. I'm going to go to hourly charts on these because I want you to see the short-term patterns. Apple came down from 233 to 217, bounced about 50% fib retracement, and twice could not get to 225-ish and pull back. If you see Apple on early Monday morning below 217.5, you can very well plunge. And I wouldn't be shocked to see something around 209.10 or even as low as 200, but that may take a while. I'm talking about the first hour or two, or even pre-market. Note that on a daily basis, this is a daily chart now, we broke a platform, we bounced to the moving averages, and we're rolling over, and particularly on Friday, we rolled over. Anything below 217.5, as you can see here, there's a lot of room to drop further. I'm going to draw a line right there and tell you that that's a key support near term, 214-ish. So 6 points down in Apple early on Monday would be a place where it might bounce. But nevertheless, the overall pattern looks like a rollover underway. If you think that doesn't look good, look at Amazon. I don't like when I see a stock come up to moving averages and price resistance, do it again, and then roll over. And quite frankly, we're right on support. If you see Apple, Amazon, and some of the others break the levels I'm showing you today, then we're in plunge mode. Anything under 169, 68 3/4, and we're almost there. Amazon had a pretty negative reversal in the last couple of days. So you can see off this declining top line, a lot of room to drop, and I mean way down here to 159.60, 151.2, and even possibly in the mid 140s at some point. This is only a 1-2. If we get a 3, look out. But it does look toppy with the long-term channel. The last couple of years have been broken. We had a breakaway gap. We filled that gap, but couldn't get to the moving average and trend line. And so you can see how Amazon is definitely in short mode. You may want to consider puts on some of these as well. Google looks worse than any of them. I'll show you why. after looking better than any of them in early July, this has rolled over. And the mini 1, 2, 3, 4, 5 wave 1. This is wave 2, and wave 3 is underway. Likely to fill that gap. You get down to 144.5 range. That's 7 points or so. So if you see that happen quickly, you're at the bottom of the channel in a 1, 2, 3. Then we get looking for a bounce and then lower lows, maybe even in the low to mid 130s. Microsoft, wow, this is starting to look bad. I was surprised when I saw this. Is this a massive double left shoulder and a right shoulder? Well, if you look at the overall pattern, there's your neckline. If you see Microsoft under 385, I think that's going to lead the market lower. I think it's going to be one of those stocks that just is getting blasted. This breakdown on Friday, not a good thing. When you get a V bottom in a platform and you break that platform, we often have another leg down. That's my take. A retest is in order of support near 388.90. You break that, you're plunging to 355.65 in that area. That's how bad things look right now. NVDA, well, the monster midway led the market up and it wants to lead it down. Friday was a nasty day. Getting up to 108.85 and finishing at 102.49, down 472 or 4.5% after testing 101. Now this low here was 90 and change. If we crack the platform at 97.5, right now your targets are 97.5, and let's call it 90.5. And a move through there can quickly plunges. I'm not kidding. I don't know if they're going to give up on NVIDIA. They probably won't because it's a growth stock. But it'll be a steal if it gets in the high 70s, my take. I don't know if we get there. But I can tell you one thing. Look at the long-term channel going back a couple years. We saw this split adjusted go from 11 to 150. So anytime you're up 14, 15 fold and you break, you can break pretty hard. And that's what's going on with some of these split stocks. NVIDIA on dire straits right here. It's got to hold. And even if it bounces to 116.18 and fails, particularly if it bounces on light volume, then you want to short it for rollover in this area. This could be a good short on the next bounce. We'll see. Tesla. Wow, just when it looked like it was about to break out, it got right to resistance, got up to the 50, and then plunged city. Smacked for almost 19 points, closing at the low for the day, going away. This suddenly looking pretty dangerous to me. Now there's a juxtaposition of support around 200. We cracked that, we could see quickly a retest of 190.91, and maybe even down to 182 right there. Not happy about that. Just to throw in a couple others, AMD cracked this wedge, looking somewhat toppy. Their support's 120.23. And Intuitive Surgical, which we don't look at often, but I want to show you this pattern. Beautiful long-term chart. And a massive engulfing reversal bar off a triple top. I'm inclined to go short this stock, at least down to 460. But once you break that level, Katie bar at the door, this thing looks like it could be 430 or less. So there's a lot of work to do for this market. Now let's take a look at the leading ETFs that we follow closely. Semiconductors, well, they are leading the market lower. They were the monster of the midway on the way up. Take a look at this long-term chart. A massive 1, 2, 3, 4, 5, wave 1, wave 2, wave 3, wave 4. And this is the fifth wave. Once they broke here, below that level, below 255, I knew we were going to hell in a handbasket. And that's one of the reasons we had that big plunge in July, because the SMH and semiconductors themselves had a hard hit. The SMH goes from 283 to 200, losing 83 points. I think that's something like 22%. It's in a 1, 2, 3, 4, 5 wave decline followed by reversal to the moving averages, which were, by the way, rolled over already, and lateral price resistance at the gap there. So this was key resistance, and because the SMH was unable to get through 253.5, the rollover that occurred shouldn't have surprised anybody. Now I'll tell you, this is a bigger support level than I first thought. I saw it broke 229. There is a double bottom on the SMH around 201. If we get there and bounce, that's great. But if we don't and we plunge through it, this thing could go, swan dive. Perhaps down around 185 Yeah, 184.5 with my, I mean, I know it's a big drop from the high, 100 points. But the way the semiconductors are acting, nothing would surprise me. Biotechs, well, they were acting great, but they flagged and broke down. Look at this head fake, little mini head fake here. It's a little breakout. But it went from 146.80 to 129 and lost 17 points in one day on a negative engulfing reversal bar. Then broke the trend line, broke the, then broke the moving averages, both of the and the VWAP. And now down goes Fraser. This thing looks really bad. And there you have it. Now I'm thinking of possibilities here of this being the bottom of some sort of trend. But I'll tell you what, any further damage, we're most certainly going to see 101-ish. That's a big drop, something between 101 and 107 in that zone. Should be tested or could be tested. And the financials, which were doing great, but you know, they certainly had some profit taking to do. Look at this run up. Literally in 4 or 5 weeks, it went from 95 to 135. That's about 45 points, about 50% in 4 weeks. 50% in 4 weeks on the financials. Well, they rolled over on Thursday, Friday, and they closed below this double top at 21-day moving average, I believe. So for me, for the downside to 113.15 is going to be the initial target. Boy, oh boy, this market is set up to get creamed. Don't be surprised if we have a little flash crasher, something like that. Now, again, I'm not going to be surprised if they open up because we're somewhat oversold, but not necessarily deeply. And the more they do that, the more they don't get the big negative, take the big, oscillator readings to the downside and the VIX. And the more they don't do that, the more the market goes down because it's all it is doing is alleviating an oversold condition short term and setting it up for more downside. And that's why I want to see the plunge, and I see it quickly, and wash it out, throw the baby out with the bathwater, and get over with. That's where I think we stand right now. So that covers the biotech, financials, and semiconductors, my leading groups. Let's look at gold because, folks, all you gold bugs out there, this is not what I wanted to see. Now, we did get up near the channel top and not far from lateral resistance. Let's just say that now is your resistance. And we rolled back to test the lateral price support and trend line. We need GDX to hold in here, no lower than 35 and a quarter, and then snap back. We'll see if that occurs. The big resistance now is 40, and then 42.5, 3. Nugget looks worse. GDXU also broke. If you change the channel angle, it looks a little like that, so we're right on it. And you also have a triple bottom support level of sorts near 30. So, but we have a triple top of sorts near 50, sorry. So we're in the 20-point range here. You do not want this to break down and roll over. Same thing goes for Nugget and GDX. Over to silver, it looks even worse because this move did not get anywhere near, let alone highs, the prior resistance highs. And so, big plunge and reversal, engulfing bar. I'm not sure what the big deal is with silver. Everyone thinks this is going to be the play going forward. Well, I don't know yet, and I won't commit to that. I'll tell you this though: what you want to look for, if your long-term goal of silver is over 38 and a quarter, and then over 44. So 38, 44, and then 48 are your targets. I'm not optimistic. That's not a good day Friday. Crazy stuff, though. I would think that precious metals will have a good time of it, but if the market plunges, but maybe not. Everything depends on inflation and some things like that. So that's gold and silver. Let's look at oil and gas. Now, oil looks terrible. Simple as that. USO. Plunging below trend lines, moving averages, and price support. This is the lowest level we've seen on USO since February. I'm not going to be surprised and kind of expecting a move down towards 64.5. If we get below that, it's probably looking at 61.2. On the other hand, Natural gas firmed up a little bit, which is unusual. I'm watching the boil carefully. Popped out of a mini base, but really this has got to do better than that. I'm not keen on this one, but I like that 5 of the last 7 days we had a solid up days with volume. So it's something to keep an eye on, especially above 9 3/4, 977. That's where I think it can go. 211, 12 1/4, 13 1/2. Something like that. That's going to take some time though. So now you've seen the longs, underlying technicals, the NASDAQ generals, and a few of the ETFs we follow: gold, silver, oil and gas, and the semiconductors, biotechs, and financials. There's others, of course, but we're going to get to it. We have a list of longs to cover and some shorts. Let's start off with AAOI, which finally got profit taking after a beautiful 4 days up. By midweeks, it was trading at 13.565 and came down to 11.71. So I lost a couple of points end of the day, but the long-term declining channel was broken. Lateral resistance was tested across here, and then backed off after taking it out for a bit. My next target is 16.5 if we can get this to extend, but support is down there at 10.5 3/4. ABUS, what a fantastic little junior biopharma. Having gone from $1.75 to $4.55 and tripled. It's at the top of the channel in a very, very orderly rising channel. Stair-stepping its way higher. Resistance is 490 and 6, and those are targets. ADMA, beautiful long-term chart. It's gone from 3 to 18 and change. So it's gone 6-fold in the last 1.5 years. It's currently consolidating in this zone. And I'm going to need a price volume surge out of it to give you a target up around 22.5. Afrm did great for us. It broke out and then exploded, got to the targets, backed off. It's right on support. There's gap support at 37.5. We're 38.33 now. If it plunges into the gap halfway, at least we may see 35. AGX, beautiful chart. Kind of an inverse head and shoulders or flat rounding bottom. Platform, breakaway gap, flag, retest, spike up. Channel top has been reached. The stock has just recently gone from 63 to 92 in the last month. Bit overextended and at the top of the channel, but all-time highs. The LDX breaks out of a base with a spike up and then in a rising channel. I don't know how far they take it. My next target is 7 and 8.5. AMRX, a beautiful rising channel as well. Recent breakout, rising channel, has support, targeting 9.5 and 11. APPS did great when it broke out here and had a nice run right to the target. Now it's had a big pullback. It's pulling back. If this is an inverse head and shoulders, and it looks like one, and this is a neckline, the neckline always becomes support, and that is about 260.63. The pullback low last week, 273. So we're about a dime above support. There's also a moving average there. I'm beneath that out, but if it does hold here and go, my targets are 4.5 and 5.5. ASTS, one of our better swings this year, popped flag and then just kept going. Rising flag exploded. Now the pullback flag is in place. It's near the trend line. The stop is on at 22. Resistance is 36. The targets are low and then high 40s. In the gold sector, I like AU. I always had. This one, though, has pulled back with the rest of the group and the commodity. Love to see it hold right where it is, but it had an engulfing reversal day on Friday. Next target is 35. I need it to hold around 27. You can stop under that. AVPT, another junior. This is a junior software company. Makes out of a base, pops and coils, and then starts up its way higher. Been in a rising channel from 4 to nearly 12, more about triple, targeting 13. BLND in a beautiful rising channel for a little low-priced software stock. After breaking out of our trading range, it's pulled back to test it right there. If it holds, your targets are 4.25, 5, 6.5. VOX breaks out of a big base and a large coil but within a rising channel, which indicates to me the possibilities that on a long-term basis, the stock is headed for 40 or better. Bioventus V-bottomed in May of 23, ran up and then moved sideways, and then started a channel up. Right now the channel appears to be accelerating, so my next target is 11. PYRN, I'm upset with myself for not giving you a swing on Friday. I thought I did, but I didn't. Great chart, great fundamentals, a big turnaround. Spiked up to resistance and backed off. That's where I put this swing. I put a new swing on it when it backed off, but this could go into a consolidation mode for a week or two. Ultimately, it breaks through here. I'm looking at high teens and low 20s. Kava has been in a monster. It's broke out of a base in December 23. Excuse me. Yeah, 23. Around the 34 range. It's gone all the way up to 128, almost 100 points, and it's sitting here on a platform. Just keep your stops underneath 110 and you're good. If it does accelerate, 135 would be your near-term target. CDNA, beautiful rising pattern. Inverse head and shoulders. Breakaway gave us a swing. It then went into a coil. And from the 12 3/4, 13 range where the swing was entered, I believe, it's gone up to 34 and tripled. Now the pullback is back to the trend line. We need it to hold here. If it does manage to hold and move up again, look for mid-30s and low 40s. Some of the blue chips have really done extremely well during this market pullback as money moved into safety. Long consolidation range for 2.5 years, broke out in January at around 81 and kept going until it reached 108. Right now my target is 123. CLBT breaks out of a base, their steps way higher, breaks out, retests the moving average and spikes to the channel top. Right now it's flagging. Look, is it extended? Of course, it's gone from 4 to it's got 300% in a year and a half. But the all-time high territory has me thinking even if it pulls back, it could be a buy for a move into the high teens, maybe 20. CLPT broke out of a base, 3-wave corrective, exploded, and now pulling back. It looks like a 1, 2, 3. Wave 4 is underway. Wave 5 can take you to 17. CMPO, Compo Secure, breaks out of a long base, breakaway gap, run to the channel top and flag and then pop again. Don't know how far they can take it, but it's new all-time high territory. Let's shoot for 14. Contessa Pharmaceuticals, 1, 2, 3, 4, and the 5th wave is underway. Stair stepping its way higher, targeting 16. Comscope, base, breakout, retest, and then pop, create a new channel, run to the channel top and pull back. Right now, anything through 4.5 could get you to 6.5. Kinetics, beautiful long-term rising channel. When it popped out of the base here, we put a swing on it. It then went from the mid-20s to the mid-high 50s, reaching 55 3/4 or thereabout. Now we need it not only to hold the channel, but make a run towards 60. Teo, similar pattern, breakaway gap, a little flag, put a swing on it. It then went from 31 to 50, just about, a little less than that, and pull back. Needed to hold around 42, target 53. Carvana has been a monster for the last 2 years. It's literally gone from 3 and change to 159, almost 160. So 50-fold increase. That's 50 times your money. Monster stock appears to be rolling over. Be careful. 100% stop under the triple bottom near 119. CWAN breaks out of a base, breakaway gap, forms a flag, and pops. Consolidating. Target 27. DRS, fantastic chart in the aerospace group, continues to press. My extension target now is 33. EBS took a hard hit the last 3 weeks after a really volatile couple months. Big run preceded that from 1.5 to 15 and change. So at this point, we need to see if this thing can hold support. Right here, there's double support. I'm a little worried about this one. ERJ, tech trader swing, breaks out of a base, beautiful base, and then stair steps its way higher. My target is 42.3. FEIM exploded and pulled back. We put a swing on it and then retested, moved up, nominal new highs, but unable to break through. Still, if I see this above 14.5, I'm looking for 17. GDS breaks out of the base, goes up to resistance and backs off, forms a flag, surges out of the flag at the top of the channel. If it does extend, a retest of 20.5 is in order. Construction stock, Granite, GBA, breaks out of a base, retests, and then stair step its way higher. It's reached all my targets and then some, taking 75 and change. My extension target is 79.80. Halozyme Therapeutics broke out of a base here, breakaway gap, formed a beautiful bull wedge consolidation, and then went from 48 to 65.5. The pullback is orderly. The next target is 70. Harrow breaks out of a base with a pop and wedge. We put a swing on that one. It's gone from the mid-teens to the mid-40s, tripling. And although this pullback is underway, it doesn't look anything other than a normal constructive consolidation of sorts. I think if it does extend, we're looking at high 50s. HRTG and a very strong insurance group is at the channel top. So we look for some sort of pullback consolidation, but the next target is 21. HWM, another aerospace stock with a fantastic chart. You can see that if this holds this consolidation zone and takes it out, my next target has to be 109.10. IAG, junior gold, that looks terrific. Base, run, 5-wave advance, 3-wave corrective, bull flag breakout, and another little flag. Targeting, and I'm looking for bigger numbers on this one, folks. If it gets through here, the next target is 7 and 9. INVA, been a beautiful rising channel, but I had a little reversal on Friday. Be careful. If it does accelerate, though, 21 is your next target. IoT, Internet of Things, fantastic long-term chart with a key breakout on Friday. A lousy market, always a good sign of relative strength. A new all-time high. I think we have some upside energy, maybe high 40s, low to mid 50s. Coca-Cola, another one of those defensive stocks like Colgate, Palmolive, Philip Morris, etc. We have a beautiful channel, but it is at the top of it. The extension target is 77. KVUE, beautiful base, big breakaway gap, and now above everything that we've seen in this stock in terms of resistance going back a year. Next target is up here, 24. LASC, pop, pullback, retest, and then a pop, pullback wedge, break out of the wedge Thursday, follow through Friday. They got to the first target at 685. We reached 697. That's near the all-time high. We get through here, it's a $10 stock, or 8 and 10. LITE broke out. We put a swing on it and ran to the target and backed off. Not a good day Friday for it. So it's on top of the gap. You may want to think about a stop under 50. LRN, a beautiful long-term rising channel. This educational stock continues to stair step higher and now flagging and breaking out of that. Let's call it a coil because it has net declining top, rising bottoms. And it broke out. I'm looking for an extension to high 80s. LSF, pop, pullback, and then another pop, and a large pullback. I'm not sure if this has, it looks like a 1-2, and then a 1, 2, 3, 4, 5. So this is wave 3, and this is 4. Fifth wave targets are 6, 7.5, and 10. LTH, base, breakout, beautiful long-term rising channel, multiple week consolidation, targeting 30 if it pops and runs. LUMN with a monster move. Look, folks, in early July, the stock was literally just under $1, and it went vertical to almost 8, so an 8-fold increase, and now a 5-week consolidation, but it does look good as long as it holds support. Right now at 4.5. The targets are 7, 8.25, and 10. Lunar, or Intuitive Machines, came out of a downtrend, 1, 2, 3, 4, 5 waves down and a retest. Breakaway gap and now a pullback wedge. Obviously, we need to get this one over 6, 10, 12. And then you're looking at, 8, 10, and 12. MCY, another sleeper in the insurance group, Mercury. Beautiful rising channel. Rising target 80.45. 3M broke out here. We put a swing on it, and then popped and coiled, and then exploded and wedged. The net has gone from around 99 to 133, a 50% pop swing for the tech traders on this one. Extension target is 139.40. Another insurance stock, MTG Investments. Beautiful rising channel. It's taking this from 12 to 26. The extension target says 28 is your target. Neon breaks out of a base with a surge and now a flag. I'm looking for 8 3/4 and 10. NRIX with a beautiful rising channel. Shows key tight channel formation with a target of 35 and 40. Nutanix, but they're coming down ugly in a 1, 2, 3, 4, 5. In reverse flag and exploded on a gap with earnings. Friday wasn't a particularly good day. It wasn't for most tech stocks. Keep your eye on this one though. I like it. NVDA, NVIDIA, we talked about earlier. That's not on my main list, of course. ONON, tech trader swing, popped out, ran, and pulled back. Next target 53. If the market holds together, you want to put a tight stop on this one. PAYO broke out with a breakaway gap and a run up and a rising flag, but it has pulled back here. For now, key support is around 6.5. Your target is 8. Phantom Pharmaceuticals broke out through a triple top and just kept running, and then broke out through secondary resistance. And at this point, my next target is 21. PI, that's Impinj, one of my favorite swings of the year. We gave you that in the, I think around 60. It went up to 100, 160 plus, maybe 175, so almost a triple. You can see that the current pattern is suspect. It might be some sort of topping pattern. Be careful. But if it gets over 170 with energy, it may take off. Palantir, big pop on Friday. 29.5 to 32.88, and it closed near the high, up to 55. Can't complain. Look how it held support right there. Nice pattern. My targets are 35 and 38. Philip Morris was the other major, along with Colgate and Unilever and Coca-Cola and a few others, that just looked fabulous here. As money started moving into defensive back in April and May, and now you can see where this is going. Maybe 130 target. PSFE, beautiful rising channel. It did have a negative day on Friday, like many did, but my extension target would be 25 if it wants to get going. Rail, unbelievable. What a great call by Kathy to stop. Just kept running. Big engulfing reversal day. A week ago, you would think the stock would have died. Instead, right back up again. At this point, my stop is on a 7. Once you get through 9, you're looking at 11. Red Cat. Finally comes out of a big base. Pops and wedges, and then pops and wedges again. So it looks like a 1, 2, 3, 4. Fifth wave is a $4 target. REF for this little junior 1, 2, and falling wedge near the trend line. If we can get this back up 2.25, and then take out 245.50, that's the key. And I'm looking for 3 and 4. RNA, one of our best swings this year as well. A very similar pattern to when I say best swing. Long-term downtrends that breaking with volume and breakaway gaps often do this. Here's where we put a swing on it in the 7 range. And only went up to 40, almost 49. A 7-fold increase. Now pulling back, be careful on support. Drop dead stop under 37. Targets mid-40s, mid-50s. Roivant, after literally basing out for 9 months, it broke out, retested, and popped again. Now I'm looking for a move to 13.5 and 17. RBMD, Revolution Med, spiked low in October last year in the 15.5 range and more than tripled to 48. Now, a beautiful wedges forming. Stay tuned. Target 48.58. Ride. I was watching this carefully last week. Boy, did it ever go. How about this for a week? 7 to 17.5. At the channel top, extended, looking for consolidation. SFM been unbelievable for a supermarket chain for it to go from 23 to 100. Four-fold increase. And it doesn't look done yet. My target's 120. SLQT pulled back to test the trend line. It's a low-price puppy in the financial services group. Insurance, another little junior insurance stock. $6 target. SMAR, big breakout Friday on earnings. It was Thursday and Friday. Vertical move from 45 to 54. And a breakout. Yeah, this stock has legs. Maybe we might see 60. SMMT exploded in May, pulled back and coiled, and then stair-stepped up this way higher. The extension target on this one, 18. Smith & Nephew SNN, breakaway gap, rising channel, targeting 33. SOC exploded, pulled back and tested 2 or 3 times here in the 13.75 range, then spiked. Last week it exploded one day from 15 to 24 in one day, and now a 4-day wedge consolidation. Based on the overall picture, it looks like a large 1, 2, 3. If we get a 4, we may get a 5. But the angle has really accelerated now, so I would look for something in here for over the next week or two. SOI exploded, pulled back. It's got a coil forming. I like the overall look. I don't like the group it's in. Your target, by the way, on this one would be retesting 13.5 and then 15. SPRY broke out and then pulled back. It's right on the moving average. It's near price support, but it's weaker than I want to see. It better hold here. Next target is a retest of 16.5 and then 20. TARS, little inverse head and shoulders, or V bottom and right-handed extended platform. Anyway, Friday was a big day for it. Notice that this high on Friday of 31.21 is a high from back in August, 31.30. So we're right there. We get to this level, we might see 34.5 and 38.9. My favorite marijuana stock is this one, Trulieve, TCNNF. Beautiful rising channel, a large multi-month wedges form. I'm going to need a pop and breakout with Viome. I'm targeting 11, 12.5, and 16. Teva, beautiful pharmaceutical stock and a big base breakout right there. It's for me, even though it looks like a 1, 2, 3, this could be a 1, 2, and then a 1, 2, 3, 4, wave 5 other way. Either way, I'm looking for extension 20. Technoglass, great long-term chart. Recently broke out and pulled back. I like it. 67, 78 targets. TGTX, again, another bearish engulfing reversal bar occurred earlier in the week, but it really had a nice snapback on Friday. At this point, I'm looking for a retest of the mid-20s. TIGO, Telecom, breaks out of a base finally. Beautiful 1, 2, 3, 4, and this is a choppy 5th, but it's up. Got to get to 27, then your target's 29 and 31. Trupanion, Pet Insurance, breaks out of a big base, runs up to the target, backs off. Next target is 57 and 65. TVTX broke out of a base on Friday. This looks like a good swing, targeting 13 and 16. UL, the Unilever, that's one of the other big blue chips that did phenomenal, and we've been following this one, looks higher. VIRT breaks out of a long base here, comes up to resistance, backs off, and breaks through. Gorgeous chart. Target, high 30s. VOXX, breakaway gap, rising channel, looking for 7.5, maybe a takeover. VRNA, 1, 2, 3, 4, 5, and a flag. Not sure if this is going to be a reversal or not, be careful, but any move over 29 or so should get you mid-30s. VRRM, Barrow Mobility, with a beautiful rising channel for a year and a half, almost 2 years now. It's taken it from 13 to 31. Now the pullback. Careful here, because in looking at this again, I noticed that this might be, or could be, a left shoulder, head, right shoulder. So it might be a topping pattern. Be careful with that. If it gets back over 28.9, then maybe you're good to go into the low to mid 30s. WGS Tech Trader swing pop, broke out, kept going. The last few months or weeks, it's gone sideways. Your stop is under 24.5, over 36.7. I would look for mid 40s and low 50s. Terra Wolf breaks out of a coil, runs to the channel top, and wedges again. Next target, 8.5. Yext, a big base, and a breakout, a couple days in a row. Breakaway gap on Thursday. Basically took out this falling wedge right there. Did your gap. Up against resistance. Next target, 7. Zeta, one of our better swings as well this year, popped and broke out, and it just kept going, popped again, surged again. I'm now looking for 33. That's a summary of some of our longs. We have some shorts to cover, and I'll wrap it up. Checking on BPMC. Tech Trader swing short really worked on Friday in particular, as it dropped 5 points, breaking a bear coil and getting near the first target at 86. Secondary target, 79, and then 73. BRBR with a massive top breakdown and a rising wedge to resistance. If it fails here, we're good to go. It did have a bearish engulfing day on Friday, but I really need to see it under 54.5 to say this is done. CMG, massive split, I think a 10 for 1, chopped around for a while, formed a rising bear wedge. May have broken down this week. A little bit of support here. I would say under this level, you want to get more aggressively short. This could be down in the low 40s. Disney has been short since it broke down here and formed a little consolidation around 105.6. It made it into the low 80s, right to the channel top, and now rolling back over again. Don't know what to make of this yet, but it doesn't look done. If the market goes lower, this might be an $80 stock. FCX, Tech Trader swing short, head and shoulder breakdown, bear flag, rolled over. My targets are 37 and 33. Hubs with a massive head and shoulder top, sharp breakdown, bear wedge breakdown, snap back, forming a larger, what I would call rising bear wedge to the trend line and a moving average. And should it fail here, I would look for 450 and 400. INFA breaks the top, forms a bear wedge, another one, a bear flag, and then that's the beauty. That's where I said this is done with a 1, 2, 3, 4, 5 waves down. And so this is 1, 2, 3, and 4. If it breaks here, we're looking for around 20. Long-term decline in INMD has taken us way down from the 90s, literally into the mid-teens, and I don't see a rally yet. So there's a possibility it may go even lower into the low teens. JBL, that's a topping pattern, a breakdown, snapback, declining tops line, channel bottom. Retesting the low would be your first target, 96 and 87.88. PACCAR, long-term rising channel, broken with a gap, wedge, flag. To me, 86.7 and 80 are targets. Qualcomm was added recently. That beautiful head and shoulder top breakdown, a bear flag said we got to short this stock. Unable to get through resistance there, it rolled over last week. Any move below 150 could plunge us to 139 or less. Schwab broke down with a couple gaps at spike, formed a bear wedge. It may be breaking, but this is different because of this. So I'm going to need this under 60, 61 to really crash it into the mid and then low 50s. SIG, I love this as a short. I think it goes significantly lower. My target is 68 and 69 to 63. Tidewater is a new one I found. This is an oil stock with a breakdown and bear wedge and another breakdown to the first target. Next target is 64 and 55. Urban is another new one I added after breaking its rising channel, forming a little bear flag in here. It came down, bounced, came down again. Any move underneath 35 we could plunge into the 31 and 28 areas. Weatherford is another one I added. That was a tech trader swing. It broke down from the bear wedge we said shorted. It's dropped from 110 to 90 already. My first target is near at 86. My secondary target is probably closer to 75. WSM, Williams-Sonoma, broke down, snapped back, broke down, and now it's right on the precipice of a rollover. The gap fill should get you to about 122. Secondary target is 110. And finally, Yelp has been in a nasty looking pattern ever since it broke down from the bear wedge. And you can see this little wedge here formed and broke down. I'm still looking for 29.30 as a target. That's an exhaustive look at all the longs, the shorts, underlying technical indicators, the NASDAQ 100 generals, some of the major ETFs we follow, and of course, a bunch of longs and some shorts. Folks, it's not a good picture, and the market's on dire straits right here. Next week early could be very nasty. Fasten your seatbelts. But make sure you review this video that I took hours to develop for you and get some good ideas as to where the market is, where your individual stocks are. And if you have a stock that you need an answer on and it wasn't covered, feel free to send me a message and I'll take care of it for you. For now, HB out. Enjoy the rest of your weekend. Talk to you later.